Good day, everyone, and welcome to this IBC Advanced Alloys webcast and conference call on the company's financial results for the 3 and 9 months ended March 31st, 2022. I'm Jim Sims, Director of Investor and Public Relations with IBC. Before we begin today's webcast, just a few reminders. Slides from today's presentation and the audio of this call are being broadcast live over the web. A recording of the broadcast is being made and a replay will be available on the IBC website later today at www.ibcadvancedalloys.com. After the formal presentation, the company will take questions from webcast participants. Now, during today's presentation, we will be making forward-looking statements, and viewers are cautioned not to place undue reliance on such forward-looking statements and information. Additional information identifying risks and uncertainties is contained in IBC's public filings available at sedar.com and on our company website at ibcadvancedalloys.com. Joining us today is Mark Smith, CEO and Chairman of the Board of IBC. Mark, thanks for joining us this morning, and please proceed.
Thanks, Jim, and welcome everyone. Let's go to the key points of today's update. First of all, I am really pleased to report that IBC was again profitable in the quarter with net income of $287,000. That is a 107% increase over the prior year period. Year to date, the company remains on a profitable footing, which is the first time in the company's history we've achieved this. Consolidated sales jumped by 16% in the quarter over the prior year period and were higher 38.8% to date. Our Copper Alloys division swung to profitability in the quarter on higher sales, which was very nice to see, and our Engineered Materials division booked its 6th straight quarter of profitable operations. IBC's profit continues to climb with $1.8 million in the quarter. That's a 7.7% increase over the prior year period. After investing in the consolidation and expansion of our Copper Alloys division, the value of our property, plant, and equipment of $14.8 million has expanded by 27% in the past year. All in all, I am very pleased with the direction of the company. As long as we continue to execute, grow our sales, reduce unit costs, and achieve new levels of operational efficiency, I believe that IBC is likely to beat many expectations in 2022 and beyond. Here you can see some indications of our ongoing growth trends. Each of these charts show results for the past 3 years, with the 4th column in each chart showing year-to-date results for the first 3 quarters of our current fiscal year. So remember that 4th bar in each of these charts has another quarter yet to go before we show final year-on-year results. Consolidated revenue and adjusted EBITDA are on the march upward, as is overall profitability. While it might be a bit hard to see, the 4th column in the middle chart shows that we are profitable after 3 quarters this year. That is a very welcome change from the past 3 years of annual losses. To me, the upward trend line tells the story. Our gross profit and gross margin have also continued to climb steadily over the past several years, and we're on an excellent track to finish out this fiscal year in very good shape. In our Engineered Materials division, where we manufacture high-performance beryllium aluminum product for commercial and defense customers, revenue of $2.96 million again rose sharply in the quarter by 37.7%. Year-to-date sales of $10.4 million rose by a very impressive 91.4% over the prior year period. The division's year-to-date gross profit of $3.55 million rose by 98.6% over the previous period. Year-to-date, adjusted EBITDA for the EM division of $2.8 million doubled from the $1.4 million in the prior year. Net income in the quarter of $554,000 was 13% higher than in the prior year period, and year-to-date income of $116 million jumped a rather astounding 216% over the prior year period. Here you can see the EM division's performance plotted over the past 3 full fiscal years, with the fourth column showing our performance year to date in this fiscal year. Again, the upward trends are very strong, and remember, we have another quarter to go to finalize that column on the far right of the chart for fiscal year 2022. In our copper alloys division, Q3 sales were $3.3 million and year-to-date sales totaled $10 million. Those numbers represent increases of 1.7% and 8% respectively over the comparable periods of 2021. The fact that the division successfully swung to profitability in the quarter was impressive, given that the team was working practically around the clock to complete the construction and production ramp up of our newly expanded foundry facility in Franklin, Indiana. In fact, I'm happy to report that the division made 11 billets last week alone, consisting of 33,600 pounds of metal. Not a bad performance during a ramp up. Copper alloys gross profit rose in the quarter and gross margin also improved year to date. This shows revenue and adjusted EBITDA for the copper alloys division over the trailing 3 years. Some of the effects of COVID can be seen in fiscal year 2021, and the lower earnings in this year to date are due to higher material costs and other typical challenges experienced while we constructed and started up our new facility. I'm looking forward to these trends turning sharply higher in the months and years ahead. Our new state-of-the-art foundry facility in Franklin, Indiana continues to ramp up its production nicely. Once we are at full-scale production, I see this investment helping to drive enormous efficiencies and other benefits such as those shown in the slide and the bullet points. One other point I can add is that our current liner in furnace number 1 has lasted for well over 40 pours. And it used to be that those types of liners would only last for less than 10 pours. So you can see the type of efficiencies that we're able to achieve with our new modernized and expanded facility. You've heard me speak before of the macro trends that are continuing to drive demand for our products. These are large and long-term drivers for our business, and I think they bear repeating for our long-term investors. For both copper alloys and engineered materials, the global expansion of 5G networks and the Internet of Things is increasing demand for materials across all of our product lines. Growth in the electronics sector is also driving greater demand for both copper and beryllium aluminum products. Defense systems are continually looking for lighter weight, high modulus materials for long-range optics and sensors. This is certainly our manufacturing specialty at IBC. As markets for electric vehicles expand around the world, we expect to see much more intensive use of copper. That is also bullish for IBC. And the growing use of microsatellites and other space applications presents large opportunities for our engineered materials division and copper division. Now with that, I'm happy to take questions from our audience.
Thank you, Mark. Now let's take some questions from the audience. For those who are participating on the webcast, simply type in your question into the webcast tool on your screen and click send. For those participating on the listen-only phone lines, you can pose your questions via email to me at jim.sims, S-I-M-S, at ibcadvancedalloys.com, or you can text me at 303-503-6203. Okay, our first question comes from Steve, who asks the following. The engineered materials business really seems to be booming. Is demand being driven more by defense customers or non-defense?
You know, the fantastic news there is that it's being driven by both. And that's really goes to the heart of my statement when I say that the business at our engineered materials division is sustainable. Because it is coming from both the commercial and the defense side. The real issue that we're going to be faced with, and it's really hitting us, this quarter and probably next, is the fact that we have one furnace to melt and pour our aluminum beryllium alloys. We are going to be needing to expand our engineered materials division in the near future here. So that's really good news from my standpoint. The team at EMC has just done an outstanding job of growing that business to the point that it is today. It's sustainable, and now we want to grow it some more.
Okay, Mark, our next question comes from Quentin, who asks, now that you have a new plant for copper alloys, how do you see that market evolving?
You know, the market is evolving, and the beauty of what we're going through right now during this ramp up is that the demand for our products is exceeding our expectations. The fact that we are, you know, really the only foundry in the United States that can pour most of these alloys really speaks for itself. With the logistics issues being faced, shipping anything across the ocean by rail, by truck, you name it, this whole point of having production here in the United States rather than having to ship it over from Japan or from Germany is really bringing us to the forefront on all of our customers' minds, and that is resulting in increased demand. So that's what we're seeing as a true benefit here, along with some of the cost reductions that I just pointed out as well. So am I excited about where copper is going? Absolutely, I'm excited about that.
Okay, here's a question from Terry. Mark, it's the beryllium alloy business sales have been growing. Do you have an issue with being able to meet new demand going forward?
As I just mentioned a moment ago, the ultimate answer is going to be yes, we're fine right now. And that's why we're starting the planning process to see if we can't get another furnace into the facility so that we can continue to grow the business. The ability of our facility out in Wilmington, Massachusetts to make these products meet the specs of the customer and meet the delivery requirements of the customer has been noticed by all of the major defense contractors, and we are getting more and more inquiries every single day. So we need to be ready, and we will be ready to grow that business even more.
Okay, our next question comes from George, who asks, if the company continues to do well in terms of profitability, do you have the option of moving to a larger stock exchange?
You know, the first thing that you have to watch as you initially list on the TSXV is company performance. And if you take a look at the last 3 quarters of performance now that we've had, we are right on the verge of being able to go to a higher exchange, so to speak. And so it's all about performance and execution that create those opportunities for us. And the good news is, yes, we are going to have those opportunities. And yes, we do plan to take advantage of those opportunities.
Okay, Susan asks, we hear a lot about IBC and NIOC. Are these two companies eventually going to come together?
You know, I'm not in a position to really talk about that. You know, that requires a lot of interaction between management and boards of directors and ultimately exchanges and everything else. And I am simply not at liberty to discuss that specific question. However, I would like to point out that IBC and NIOC do have a joint development agreement concerning scandium. And our Chief Technology Officer, Ben Rampula, now that he's in a position to actually spend some time on that matter, is spending time on that matter. And I think both companies are very excited about what the results could be. Think about an aluminum beryllium scandium alloy that would be a potential here. And that gets pretty exciting because it even lowers the weight of that beryllium aluminum alloy even more. So I think that we're in for some exciting times, and I have high hopes for that joint development agreement now that we have the time and the effort that we could put into it.
Okay, here's a question, Mark, from Ludo, who asks, can you envision doubling of sales in engineered materials? He also asks, can you envision doubling of sales in copper alloys? And then to both of those questions, how many years might this take?
There is absolutely no question in my mind we can double the sales in both divisions so long as we give them the capital that will be necessary to allow for that doubling of sales. And that's all part of what our management team and our board of directors is looking at literally every day as we talk about ways to continue to grow this business. We've got to make sure we allocate the right amount of capital to both divisions and allow both of them to grow. But I don't see anything other than proper management of capital getting in the way of our doubling sales in both divisions. I think there was a question, Jim, also about the timing for that, so I should probably address that too. I think it's going to be very interesting to see copper ramp up in its sales now that we've given them the foundry they need to produce the materials that their customers want. And I think that you'll probably see copper get into that doubling of sales within the next, call it 12 to 18 months. EMC is going to be just a little bit slower because we are going to have to provide significant capital for them to provide an additional furnace that will allow them to perform even better than what they are today. But even in EMC, in 2 to 3 years, I can see that doubling in sales as well.
Here's a question from Kevin, who asks, do you have any concerns with regard to access of raw materials needed to produce products?
The simple answer to that is no. We're able to work around a lot of the logistics issues, and that all comes from long-term relationships and trust with the people that we work with on the logistics side of things. I think the biggest issue for us in the next few months is as copper ramps up their production, they're going to need a tremendous amount of feedstock to feed that foundry, and that's going to require working capital. So again, the company is very focused on how do we make sure we've got the working capital there to allow copper to become the company that it can become. And again, I don't see anything that's going to get in our way in that regard, but there are issues with working capital, and we just need to continue to manage the cash in the company properly. And I'll tell you, our CFO, Tony Wendell, has just done a phenomenal job of making sure that we can do all the things that we want to do with the cash. And as that production increases, cash is generated, and it just eases that whole issue for us. But there is a transition period. We're going through that now, and we'll work our way through it.
Okay, thanks, Mark. That is the end of our questions for the webinar today. Thank you all for participating, and thanks for your questions. If there are questions that come in late, there sometimes are, I'll be happy to get back to you on those via email. But for now, thank you all for joining us today, and we hope to see you again soon. Bye-bye.